Hello and welcome to our deep dive into Sonic Automotive Inc., ticker SAH, a leading automotive retailer in the US. In this video, I'll analyze Sonic's financial performance, strengths, weaknesses, and whether its stock could ever hit the ambitious $1,000 mark. Let's get started. Sonic Automotive operates three key segments: franchise dealerships, where they sell new and used vehicles along with services; EchoPark, their used car retail chain; and Power Sports, which focuses on motorcycles and recreational vehicles. With $14.2 billion in revenue in 2024, Sonic holds a strong presence in Texas and California, and these two states actually contribute 51% of the company's revenue. That's a big concentration, but it's not the whole story. Sonic's diversified business model, record-breaking fixed operations, and the addition of 335 new technicians in 2024 are definitely major strengths. And check this out. EchoPark's turnaround, achieving a $27.6 million adjusted EBITDA in 2024, is a promising sign for the company's future growth. But it's not all smooth driving. Sonic does face some challenges. New vehicle profit margins dropped 30% in 2024, with per-unit gross profit falling to $4,279. Even though EchoPark is improving, it posted some pretty significant losses in 2023, including an $83 million adjusted EBITDA deficit. High debt levels and macroeconomic risks like rising interest rates and supply chain disruptions could seriously strain Sonic's balance sheet. Plus, consumer demand fluctuations and potential tariffs are always looming threats to profitability. Let's talk margins and debt. Sonic's overall gross profit margin stands at 15.5%, but their fixed operations like parts and service are much higher, with a strong 50.7% margin. Finance and insurance bring in an impressive $2,427 per unit sold, making up a quarter of profits. However, worth noting, new vehicle margins have declined steadily, down 25% annually since 2022. On the debt side, Sonic had $864 million in liquidity in 2023, and solid cash flows from franchise dealerships are helping support those debt payments. Still, if interest rates keep rising, this could turn into a much bigger challenge. Now, beyond selling vehicles, Sonic's side revenues from finance, insurance, and fixed operations actually account for over 75% of their gross profit. These high-margin streams really help stabilize the balance sheet. Since its 1997 IPO, Sonic's stock has delivered an average annual return of 8 to 10%, which is actually a bit better than the US market's 7.7% in 2024. And while the company recently increased its dividend by 9% to 38 cents per share, it's not technically a dividend aristocrat yet, since the increases haven't always been consistent. Looking ahead, Sonic is betting big on EchoPark expansion, Power Sports growth, and digital retail modernization. Electric vehicle adoption could be a game-changer for the company, but tariffs and economic slowdowns are real risks. When you compare Sonic to rivals like AutoNation and Lithia Motors, Sonic's EchoPark model is definitely innovative, though it's still smaller in scale. In 2024, Sonic's industry-beating return of 10.8% put it on par with the Russell 2000, but global indices like the MSCI World show similar volatility. So, can Sonic's stock reach $1,000? At its current price, right around $60 to $70, it would take some seriously exponential growth. Think breakthroughs in electric vehicles, digital retail dominance, or something equally massive. While Sonic's diversified model and EchoPark's recovery are both promising, macroeconomic risks and margin pressures make this a long shot in the near term. Thanks for joining me for this financial analysis. If you found this useful, don't forget to like, subscribe, and drop your thoughts about Sonic Automotive in the comments. See you in the next video.